Stop before you sell everything. Markets are under panic and everybody is selling. Share very good few strategies which would help you stay profitable in the long term and in the short term. Stay connected on the video. Markets are crashing everywhere. Investors are panicking, but hold on, you can be profitable. In this market crash, we are going to make a profit. But for this, stay on. What if I tell you there would be a golden opportunity instead of panic and disaster? If you are an investor or trader, hit the like button. So the first thing is to do is not to panic sell. The biggest mistake that people do during a market crash is to panic sell. But hold on, this disaster can be your own benefit. We can turn this disaster into profits in the long term and in the as well as in the short term. When prices fall, fear takes over and people start panic selling and people sell at a loss. We are not going to be that people. Remember the 2008 real estate crash, markets recovered. Even the panic, COVID, markets recovered. So if you sell in fear, you lock in a loss. But if you stay patient, history shows that markets have always recovered and given extra returns those who were patient. Markets go through different cycles. There are downturns and there are upturns. And the history of market always says downturns are always temporary. So the motto is not to panic sell, but to hold on and wait and watch. The second thing you could do in the market crash is to look for a strong stock. Not all stocks crash equally. Some are strong and some are weak. We find the strong ones who have, due to market conditions, fallen. That creates an opportunity for us. Do not go for the weak stocks. Some weak stocks never recover. They die out and you will lose your money permanently. But strong blue chip stocks like Infosys, TCS, Reliance, such strong stocks, not a recommendation, bounce back because these are quality and they are blue chip stocks. If a great company stock is falling, that means you're getting a 100 rupees note for 50 rupees. That is a 50% discount on a 100 rupee note. That is if a blue chip company stock, say for example Reliance is 1000 rupees and due to market conditions it has fallen down to 700. It creates an opportunity for you to buy Reliance at 700. And the next thing while buying blue chip stocks is to look for three things. Focus on fundamentally strong stocks, balance sheets, buy quality stocks for long term and think long term. The biggest mistake people make is stopping their SIP. Even if you do not have any understanding of markets, please do not stop your SIPs. SIPs are getting the units at a discount. Keep your SIPs going during a market crash. That will average out your investment in the long term, and in the very long term will help you in your profits, your returns, because stopping SIP is like suicide in market crash. Do not listen to the other noise which has been fed to you by news and wrong videos. SIPs follow a simple method called simple rupee averaging, that is simple cost averaging. That is, you get more money, more units with less money during a market crash. You will make higher profit. So if you're doing mutual funds, don't stop. If you are an employee, a salaried employee or self-employed, or you have a cash flow, keep money for buying dips and average your investments. If you are confident about your investments, may it be stocks, may it be mutual funds, because this crash provides an opportunity. Even Warren Buffett says market crash provides the best opportunity for buying. They also buy stocks at a discounts during such crashes because they sit on cash for a very long term. And to understand the markets do not recover in a one day. They keep going up and down, up and down, up and down, recovering in a unstable way of mode, but they do surely recover. Instead of investing in one go, try investing in phases. Try investing at phase 1, phase 2, phase 3. Such you can maintain your investments, follow your strategies and buy more units, buy more stocks at a less and at a discount. Don't go in all at once. Spread your investments, let them have their time.